Welcome to Chapter 6, the Journal. What exactly is the General Journal? It is a book in which all accounting entries for all transactions are first recorded before they are recorded or posted to the General Ledger. Source documents are used to help determine which transactions affect which accounts and cause debits and credits in different accounts. Up until now, we've been using T accounts to see what accounts are debited and credited. Now we are going to see it organized in a way that accountants use every day by journal entries. These journal entries are put into the journal entry by date. If you turn to page 177 in your textbook, we will see an example. Here is an example of what you're seeing in your textbook right now. As you can see, every entry has a date with the month, the year, and the date. The first debit entry is on the left, then we have the credit entry, and then we have an explanation of why we have this entry. We also have the monetary amounts of the debit and credit over here. So, as we see, we have a two-column general journal. Journalizing is the process of recording accounting entries in the journal. The journal is known as the Book of Original Entry because this is where we take our source documents and put each transaction into a journalized account. First, we have to record the date. The year is put on the first line of each page. The month is the first line on each page. We do not repeat the month for every entry as it's understood, so we enter the next month when it occurs. And then we have the day. We have to enter the day for each line of the second column. The day is repeated for every transaction. Steps in recording a journal entry. Step 1, enter the date. Step 2, enter the names of the accounts that are being debited on the left side of the particulars column. The amounts of the DR money, you also have to record the amounts in the DR money column. Step 3, enter the name of the accounts that are to be credited. These have to be indented a bit, approximately 1.5 centimeters in their particulars column. And then we have to input their monetary amount in their CR money column. For step 4, for every journalizing transaction, we need to give an explanation of what was happening. So if there was a check, we have to give the check number and give the particulars of why we received this check. So what is the purpose of the journal? Essentially, it is to provide a continuous record of the accounting entries in the order in which they occur, and it makes it easy for accountants to go back and check where entries happened and on which date. All this information is coming from source documents. These source documents are given to accountants, and this is a good way for them to keep it organized and have the lists of transactions in the order that they occurred, by the date that they occurred. This is an example of the opening entry of the journal. In order to open the books with the first transaction in the journal, it is called the opening entry. So, as we see in our textbook, figure 6.3. On October 30th, we have all of our debits on the one side, our debits for our bank, supplies, equipment, and automobile, so all of our assets. And then we have our credits for our bank loan and our capital. Our capital for our liabilities and our owner's equity. So as we see, this is what we have for our opening entry with the date. After this, each transaction will have a space, its own date, debit and credited amounts, followed by an explanation.